All right, welcome. This is June Collier. It has been a few weeks since I actually shot some video, but what I want to do today is I want to do a quick video because there are so many people who have goals of investing in the stock market in 2020. And so what I want to do is I want to talk to those of you who are new investors, maybe those of you who have never invested before, and give you some quick strategies, some quick things that you need to be thinking about as you go into 2020 and as you go into thinking about investing in the market. Now, I believe that investing in the market is the right thing to do. I think it's a good thing to do, but I think that you must be, you got to be careful in your approach. You got to think about what you need to do. And if you're new, you definitely need to make sure that you don't make any mistakes where you lose a lot of money. And so the first thing that I would tell a new investor to do is the first thing you need to do is open up a brokerage account. And so many of you say, well, what is a brokerage account? I've never heard of a brokerage account, don't know what that is. Simply, a brokerage account is just a place where you can put money into that account, and then you have access to the market. So you have access to start buying stocks, to start buying ETFs, to start buying mutual funds. So a brokerage account gives you access to make the purchases that you need. So you need a brokerage account. Now there's many different brokerage accounts that are out there. I'm not doing any recommendation on any types of brokerage accounts, but just to get you started in the right direction, there are brokerage accounts like Schwab, Fidelity, Vanguard, TRowe Price, there's eTrade, there's Scottrade, there was Ameritrade, but I think Ameritrade got bought up by Schwab. So you've got all of these brokerage accounts that you can get, and then that brokerage account gives you access to the stock market. So the first thing you want to do is open up a brokerage account. Many brokerage accounts allow you to open up an account with no money. So those would be exciting. I think Fidelity has a no money brokerage account. eTrade may have a no money brokerage account. So check out the brokerage accounts, check out their fees. Many of them have done away with their fees. So you want to check those things out. You also want to see if they have any type of support. So for example, Charles Schwab is one of my brokerage accounts. I've got 2 or 3 different brokerage accounts, but Charles Schwab is one of my brokerage accounts. And I can call Charles Schwab and I can talk with someone on the phone to help me out in some of my transactions. And so I think that can be very helpful, especially for a brand new individual, to be able to have tech support, to be able to have someone that you can call that will lead you in the right direction. Now, when you open up your brokerage account, there are still things that you need to know about opening up a brokerage account. So are you just going to open up a regular account that you trade in? Are you going to open up an IRA? Are you going to open up, a tax deferred type of account? So those are different accounts inside of that brokerage account itself. And so again, if you're having trouble deciding on what type of account you need to open inside of your brokerage account, then again, you want to contact customer support for that company. So whatever company you decide to go with, if it's Charles Schwab, they've got a customer support number. If it's eTrade, they got a customer support number. Speak with the individual about what it is that you want to do so that you know what type of account you should be opening, okay? Typically, your retirement account is going to be money that you're not touching until retirement. Many times those accounts are tax deferred versus just a regular trading account. You can trade in and out, but you will pay taxes on that at the end of the year. So again, talk with someone in customer service at those trading accounts or those brokerage accounts, and they'll be able to help you with that. The next thing that you're going to need to do is start investing in your knowledge. And I've got a ton of books around here, but one of the things that I can tell you is get some books like this, Stock Investing for Dummies, right? Don't be so proud to think that you got to go out and get these big trading books and things of that nature, especially if you're beginning. So go find some books for beginners. stock investing for dummies, stock investing for beginners. There's a lot of different books that are out there that'll give you a baseline foundation to what you should be learning before you actually get into the stock market. So books can be a great resource. I've got tons of books, and that's usually where I always start. Then behind books, you may have seminars. There may be seminars that you can go to learn more about the basics of stock investing. And then there are courses, video courses. There are a ton of different places online that will teach you about investing in stocks, and you can sign up for those courses. And then meetup groups. We've got some meetup groups right here in Atlanta. I haven't had a chance to get to them, but there are meetup groups where people get together and they do and have discussions around different types of trading, whether it's stock trading, whether it's trading Forex, whether it's trading, options. There's a lot of different types of meetups that you can participate in. So look for a meetup in your area where you can meet some people who can help you and point you in the right direction so that you can begin your trading experience. And then finally, just connections, being connected with like-minded people. That typically happens with these meetups, with these online groups where you get connected to individuals who are traders themselves, and you start talking the talk. If you want to learn something, you really have to start surrounding yourself around people who already have the knowledge, who already are doing what it is that you're trying to accomplish. So getting connected with other people who are trading stocks, who are also investors, can be very, very helpful, and it can help you speed up your process. Now, while all of these things are happening, one of the other things that a new investor has to do is you have to, what I call, build your position. And what that basically means is you've got to start funding that brokerage account. So you've got to start putting some money in that brokerage account and start building your position in that brokerage account. Typically, if you're just brand new, you're just starting out, I would just say, start chunking some money over there every time you get paid. Every time you get paid. Now, we've got tax season that's coming up. Many of you might be getting a refund back in your taxes. That's a great opportunity, a great time for you to take your refund money and put it into your brokerage account. So you've got some money that you can begin trading with, you can begin investing with. And so those are things that are important. Now, in the beginning, you're going to be investing. Investing is different from trading. Investing is more of a long-term approach, okay? Trading is, hey, I'm gonna buy this stock, and when the stock goes up 10, 15, 20%, I'm gonna sell that stock. That's more of a trading type of mentality. Trading requires a lot more capital. But if you're investing, you can buy one share of Starbucks, one share of Visa, one share of Nike, and then next pay period buy another share of Nike or Visa or Amazon or wherever you want to buy. And so that's more of an investing approach because you're buying as you go along and you're building your portfolio. So for most brand new investors, you're going to be an investor before you ever become a trader because you're going to need to build that portfolio up to the point where you've got a significant amount of money that you can actually start buying and trading. Today it's a lot easier because the trading fees have sort of gone away. So you can become a trader a lot faster. There used to be a time where your trading fees to get into a trade was like $9. The commission was $9, $10 to get in, $9 to $10 to get out. So just to trade in and out, you're going to spend $20 just in commissions. So in order for you to make a profit, your stock that you had would have to be larger. The profit would have to be larger than $20 because you had trading fees of going in and out. Now they're doing away with trading fees. eTrade doesn't have any trading fees. Charles Schwab doesn't have any trading fees. So they've done away with the trading fees. So a person could technically trade in and out with a small amount of money and still do well versus back when you actually had to worry about those trading fees. So that's something that you want to be, mindful of, and then set yourself a goal. If you ever get to the point that you want to sell covered calls, or you want to sell covered calls, then what you're going to need is you're going to have 100 shares of that particular stock. So I'm at a point now in my trading career where I sell covered calls. So when I sell covered calls, I have to have 100 shares of that particular stock in order to sell a covered call on it. So start thinking about that as well, because that might be a strategy that you want to use later on down the road as you begin building your portfolio, or you begin to build your position. What you may want to do is put together a goal of getting 100 shares of a particular stock, and then you are positioned yourself where you can write a covered call. All right, and we'll talk about covered calls a little bit later. You don't need to worry about that now if you're a brand new investor. What companies should I be investing in? And so here's the thing that I like to tell people is that in the beginning, you want to minimize the risk of losing money. Now, here's what I'm going to tell you. You're going to lose money in the stock market. Every trade is not going to be a winning trade. The key to being successful in the stock market is to have more wins than losses. And you have to manage your money properly. So you just can't go all in with all your money on this one particular stock. You've got to learn how to manage your money. And again, that's another topic for another day. But what I want you to do as a beginner investor, I don't want to scare you off because you go into investing and then all of a sudden you lose some money. So what I want you to do is I want you to position yourself to be in the best spot of at least keeping your money in your account. Okay. Now, what do I believe? And this is just a personal belief, but I would say for a brand new investor, stay away from all the so-called sexy stocks. Stay away from the Ubers and the Lyfts of the world, all the new stuff, the new technology. Stay away from those types of things. You can make a lot of money with those things, but they are a lot more riskier than what I'm going to share with you. I believe that a new investor should probably start off with Dow Stocks, the Dow, D-O-W. And there are 30 stocks that are inside of the Dow. These are time-tested, proven stocks, time-tested, right? Now, even in the Dow, you can lose some money, right? Because General Electric used to be in the Dow. They're no longer in the Dow. So just because they're a Dow stock does not mean that you are just going to make money. You still can lose money with Dow stocks. However, because Dow stocks are so big, they've been around for quite some time. They are stable. They are solidified. That's the place that I would go. Now, here's a couple of reasons. Again, they're stable and strong. Another reason is that most of your Dow stocks are going to pay dividends. So you may have a dividend yield of 2%, 3%. If they pay a 2 to 3% dividend yield each year, that means that there's a 2 to 3% gain that you're going to get on that stock just from the dividends alone. Okay, so that's a good place to be. Also, many institutional investors invest in Dow components. And so if you haven't watched my video on institutional investors, that's basically the big boys. That's the mutual funds, that's the retirement funds, the 401ks, that's the college endowment funds, where they have billions of dollars that they're investing in the market. And so when they go and buy Visa or MasterCard, or they go buy Nike, they might go and buy 4 million shares, 5 million shares of that particular stock at one time. And so that's what we call big money. And you want to be where the big money is because they really move the market. And they like the Dow component stocks because of the dividends, especially if the market is sort of, if we're in a market where people don't know what's going to happen, is a recession coming, what's going to happen, a lot of the big money will go into the Dow components because the Dow stocks pay out dividends. All right. So those are a couple of things that I wanted to share with you. If you're a brand new investor, if you're thinking about investing, first of all, open up a brokerage account, start funding your brokerage account. I don't care how much it is, $50 a week, $100 every 2 weeks. start putting money in that brokerage account, right? And then start improving your education on stocks. So while you've got money that you're funding your brokerage account in, you're also learning about the stock market. You're starting to learn the terminology. You're starting to hang around people that's talking about stocks, and you're building your position. So as you begin to buy stocks, start building your position. I like a goal of trying to get 100 shares of a particular stock. Doesn't always have to be that way, but start building your position and then start looking at Dow components, Dow stocks. These are going to be stocks like Home Depot, Coca-Cola. They're going to be stocks like Nike. It's going to be stocks like Visa. These are all companies that are in the Dow component. All right. So that's all that I got for you today. I hope you enjoyed this particular video, got some takeaway. If there's any questions or comments that you'd like to share and want me to read, please leave those comments below in the comment section. I read all comments. I try to reply to all comments, and that sort of helps me know what the next video is that I should be doing. With that being said, this is Jim Collier. God bless, take care, and have a better than amazing day.